Investing can seem daunting. The sheer number of options, the complexity of financial jargon, and the fear of losing money can make anyone hesitant to take the first step. But it doesn't have to be. With the right knowledge and tools, you can navigate the world of investing with confidence and ease. Mutual funds offer a simple and effective way to grow your money. They pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other securities. Imagine a basket filled with stocks or bonds from different companies. This basket represents a mutual fund which holds a variety of investments to spread out risk. That's what a mutual fund is. By investing in a mutual fund, you are essentially buying a piece of that basket, gaining exposure to a wide range of assets. When you invest in a mutual fund, you're buying a piece of that basket. This diversification is key. It means that your investment is not tied to the performance of a single stock or bond. It spreads your risk, protecting you from the ups and downs of any single stock or bond. Diversification helps to balance the potential for growth with the need to manage risk. Think of it like this. Wouldn't you rather have a variety of fruits in your basket than just one type? This variety ensures that if one fruit spoils, you still have others to enjoy. Mutual funds are managed by professionals. These fund managers have the expertise and experience to make informed investment decisions on your behalf. These experts pick the investments in the fund. They analyze market trends, economic data, and company performance to select the best mix of assets. They work to achieve the fund's investment goals. Whether the goal is growth, income, or a balance of both, the fund managers strive to meet these objectives. This takes the guesswork out of investing for you. You don't have to worry about picking individual stocks or bonds. The professionals handle it all, allowing you to focus on your financial goals. Mutual funds are accessible. You can start investing with a relatively small amount of money. This makes it easy for anyone to begin their investment journey. This makes them a great option for both new and seasoned investors. Whether you're just starting out or looking to diversify your existing portfolio, mutual funds offer a flexible and convenient solution. Whether you're saving for retirement, a down payment, or your child's education, mutual funds can help you reach your goals. They provide a structured way to invest with the potential for growth and income over time. By investing in mutual funds, you are taking a proactive step towards securing your financial future. It's a path that offers both simplicity and the potential for significant financial growth. So, take that first step today. Explore the world of mutual funds and discover how they can help you achieve your financial dreams. Your path to financial growth starts now. One way to buy mutual funds is directly from the fund house. This method is often preferred by savvy investors who want to cut out the middleman and take control of their investment choices. Think of Fidelity, Vanguard, or T. Rowe Price. These are some of the most well-known fund houses in the industry, each with a long history of managing a wide array of mutual funds. These companies create and manage a variety of mutual funds, catering to different investment goals and risk appetites. Whether you're looking for aggressive growth or stable income, there's likely a fund that fits your needs. Buying direct can save you money. When you purchase mutual funds directly from the fund house, you often avoid the transaction fees that are typically charged by brokers or other intermediaries. This can be particularly beneficial for long-term investors who make regular contributions to their investment accounts. Direct plans also typically come with lower expense ratios. The expense ratio is a critical factor to consider because it directly impacts your net returns. The expense ratio is the annual fee you pay to cover the fund's operating costs. This includes management fees, administrative costs, and other operational expenses. Lower expenses mean more of your money stays invested and working for you. Over time, even a small difference in expense ratios can lead to significantly higher returns. Imagine saving even a small percentage each year. This seemingly minor saving can compound over time, leading to substantial growth in your investment portfolio. Over time, this can make a big difference in your returns. The power of compounding cannot be overstated. It is one of the most effective ways to build wealth. Buying direct gives you greater control. You have the autonomy to make decisions that align with your financial goals and risk tolerance. You're dealing directly with the source. This direct relationship can provide you with more timely and accurate information about your investments. You can easily access information about the fund, its performance, and any updates. Real-time data allows you to make informed decisions quickly. Many fund houses have user-friendly websites and online portals. These platforms are designed to make it easy for you to buy, sell, and track your investments. These platforms make it easy to buy, sell, and track your investments. With just a few clicks, you can manage your portfolio, review performance metrics, and stay updated on market trends. Additionally, many fund houses offer educational resources and tools to help you make better investment decisions. From market analysis to investment calculators, these resources can be invaluable. Some fund houses even offer webinars and seminars to educate investors about market trends, investment strategies, and financial planning. Customer service is another advantage. When you buy directly from a fund house, you have access to dedicated support teams who can assist you with any questions or issues. The process of buying directly is straightforward. Most fund houses have streamlined their online platforms to make the investment process as simple as possible. Once you've made your purchase, you'll receive confirmation and can easily monitor your investment through the fund house's online portal. Regularly reviewing your portfolio is crucial. Direct access to your investments allows you to make timely adjustments based on market conditions and your financial goals. In summary, buying mutual funds directly from fund houses can offer numerous benefits, including cost savings, greater control, and easy access to information and support. It's a strategy worth considering for any serious investor. Most major banks offer mutual funds to their customers. This means that if you already have a relationship with a bank, you can easily explore investment opportunities without needing to look elsewhere. This can be incredibly convenient. Imagine being able to manage your checking, savings, and investments all in one place. No more juggling multiple accounts or remembering different passwords. You're already familiar with your bank. You trust them with your checking and savings accounts. Why not your investments too? This familiarity can provide a sense of security and confidence as you venture into the world of mutual funds. Buying through your bank simplifies the process. You don't need to go through the hassle of setting up a new account with a different financial institution. Everything is streamlined and integrated. You can often purchase funds directly through your online banking platform. This means you can make investment decisions from the comfort of your home at any time that suits you. No need to open a separate account or navigate a new website. The interface you're already accustomed to will now serve as your gateway to investing. This ease of use makes investing less intimidating. For many, the thought of investing can be daunting, but when it's integrated into a familiar platform, it becomes much more approachable. Banks often provide access to a curated selection of funds. These are typically chosen based on their performance, stability, and suitability for a wide range of investors. These funds are typically chosen for their performance and suitability for a range of investors. This means that whether you're a conservative investor or someone looking for higher returns, there's likely a fund that matches your risk tolerance and investment goals. This can be helpful if you're feeling overwhelmed by the sheer number of mutual funds available in the market. Having a curated list can simplify your decision-making process and help you focus on the best options. However, it's important to remember that banks may not offer the same breadth of fund options as other channels. While the curated selection can be beneficial, it might also limit your choices. Be sure to compare the available funds and their expense ratios before making a decision. Expense ratios can significantly impact your returns over time, so it's crucial to understand what you're paying for. Additionally, consider looking at reviews and ratings from independent sources. This can give you a broader perspective on the performance and reliability of the funds you're interested in. If you're unsure about which funds to choose, consulting with a financial advisor can be a wise move. They can provide personalized advice based on your financial situation and investment goals. Many banks offer the option to schedule meetings with their financial advisors directly through their online platforms. making it even more convenient to get professional guidance. By leveraging the resources and convenience offered by your bank, you can make informed investment decisions with confidence. Remember, the key to successful investing is to stay informed and choose options that align with your financial goals and risk tolerance. Online and in control, the rise of investment platforms. The internet has revolutionized the way we invest. Online investment platforms like Charles Schwab, Fidelity, and E-Trade have become increasingly popular. These platforms offer a number of advantages. They provide access to a vast selection of mutual funds. You're not limited to the offerings of a single fund house or bank. Online platforms are incredibly user-friendly. They are designed for investors of all levels of experience. You can easily research different funds, compare their performance, and track your investments all in one place. Many platforms offer educational resources and tools to help you make informed decisions. Perhaps most importantly, online platforms are known for their low costs. They often charge lower trading fees compared to traditional brokerage firms. This makes them an attractive option for cost-conscious investors. Partnering with the pros financial advisors and your portfolio. For some investors, working with a financial advisor is the preferred route. Financial advisors offer expert guidance and personalized advice. They take the time to understand your financial situation, goals, and risk tolerance. A good financial advisor acts as your financial partner. They develop a tailored investment strategy designed to help you reach your goals. They can also provide valuable insights and perspectives on market trends and economic conditions. This can be especially helpful during times of market volatility. Financial advisors can manage your investments for you. This can be a huge relief for busy individuals or those who lack the time or confidence to manage their own money. However, it's important to remember that financial advisors do charge fees for their services.